What is going on, investors? Hopefully, guys are doing well out there. It is finally Friday, and it's finally time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns. This week, we had a major buyback announcement from Apple. We had Amazon earnings. We had Tesla potentially forming a bottom and turning a corner, and we've got a lot to talk about. So we kick things off like we always do with Meta Platform. Start of the week at 435 and some change, up 3.75% to finish the week at 451.96. The majority of Americans believe that China is using TikTok to influence public opinion. I tell you what, America uses some of their social networks as well to formulate and influence public opinion. But I tell you what, it certainly flies in the face of TikTok getting around that ban, and that is going to be major developments going forward. Moving on to the big news of the week, and that is Apple. Started the week at 175, initially slipped down, but then bam, up 4.6% to finish the week at $183.38 per share. That's after reporting earnings that were an absolute complete disaster. Overall revenue declined 4.3%, but when you strip out the services business and just focus on the products, the phones, the Macintoshes, and the AirPods, revenue declined 9.5% over the last year on the physical devices. And keep in mind, the physical devices, primarily the phone, is a subsidized device. You are on a payment plan, you are trading in a phone and adding it to your cell phone bill. The vast majority of people don't even pay the full price of the phone, and you're seeing demand slip. We'll see if Apple's able to turn it around, but maybe they don't need to, because they raised the dividend by 4.2% and they authorized one of the biggest buybacks we've ever seen, $110 billion. That was enough to send the shares soaring up over 6%. And we'll see that technically not only in Apple, but because Apple is such a big company, you will see it in the S&P 500 as well. Now, Google allegedly paid $20 billion to Apple in 2022 to be the default search engine for Safari. It connects to our next story because AI and Apple are quietly building a, quote, dream team, if you will, to build a final product that still remains a mystery. Well, here's your product, Apple. Instead of building AI services, maybe you have a couple of things on the device itself, hardware inside the silicon. But I tell you what, this sounds like a great business. You have Google or Microsoft pay tens of billions of dollars per year to be the default AI on the device. And I think, honestly, there's been no announcement of this, but I think the rumors, and it's percolating a little bit, I think that's the direction Apple goes with. I don't think they build their own language models. I don't think they go down that path. They partner with somebody else. It's just like, why would they build their own search engine when Google will pay you $20 billion to be the default search engine? Google and Microsoft will pay that much to be the default AI option on the phone. And I think that's the direction they should go. And if they do, it's probably bullish for the stock. Moving on to Amazon, start of the week at 181. The company quietly reported earnings, and it gave you no reason to sell. And shares of Amazon up nearly 2.75%. Finished the week at 186.21. The company, like we said, reported earnings $143 billion. Unlike Apple, they're growing their revenues really across the board, up 12.5%. They beat expectations. The forward guidance actually wasn't that good. Guidance was for only $144 billion up to $149 billion. The expectation was closer to about $150 billion. But what has transformed over at Amazon is the profitability, not only of the e-commerce business, but we saw the profits of AWS skyrocket as well. Now, NBC is paying $2.5 billion a year for NBA TV rights to edge out Time Warner's TNT, which has really had the broadcasting rights forever. Although if you're my age, you remember those NBC games, often the Chicago Bulls or the Lakers or the Celtics. Right now, Warner Brothers is paying about $1.2 billion per year, and so this would be a doubling of the rights. So if you think basketball players are getting paid right now, just wait another year or two. Those contracts are going to get even bigger. Moving on to Netflix, start of the week at 558, and the resiliency of the streaming giant just on display again. Shares of Netflix up another 3.75% on no news. I mean, the company didn't do anything. However, you're getting valuations placed on the other streamers because every other streamer other than Netflix is basically at rock bottom. And so Sony and Apollo, there was a rumor last week that I think we reported that Sony wasn't interested. Well, it looks like they probably are, to the tune of $26 billion bid for Paramount, which currently has a market cap of $9.75 billion. I tell you what, if you have the stomach for ups and downs, because even with all these bids, you're getting a lot of pops and drops on this one. If you have the stomach for it, there are some opportunities in ticker symbol PARA. And I tell you what, if you've got enough companies poking around at this thing, that puts a floor underneath the valuation. And then you're looking for upside. Just understand, you get a buyout and a forced sell of your shares. You have to pay income taxes on that, and depending on what bracket you are in, could be a lot. Moving on to NVIDIA, start of the week at 861, up 3%, finished the week at 887.89. AMD reported their earnings earlier this week. They weren't that great, and when you've got a $236 billion market cap on this one, and now you've got a forward price to earnings of 41, and you come over here and look in NVIDIA, looking real cheap at 34 times forward, and I think when this company reports, NVIDIA doesn't report until next month, or later this month. Now we're in the month of May, so we got a couple more weeks before we wait to NVIDIA. All the signs point not to a gigantic beat and raise from NVIDIA, but it's going to be a beat and raise type situation with this company. And so this forward price to earnings is a little misleading because it says 34, but when you factor in the next 3 or 4 quarters are probably going to get raised up a little bit, you're probably in the high 20s on the price to earnings. So when you look at AMD, when you look at Supermicro, these stocks are looking fully valued, and they don't have the growth rate and certainly the moat around their business, at least on the AI side, like NVIDIA does. Now, AI provider CoreWeave secures another $1.1 billion funding round. CoreWeave is getting preferential treatment from NVIDIA, which is a part investor in the company. CoreWeave is currently operating about 14 data centers scattered around the United States. Now, what is interesting about CoreWeave, they're not only getting equity funding as well, but they're able to actually borrow money using the GPUs that they have inside of their data centers as collateral, similar to how you might use your house as collateral to get a loan, or how a business might use cash flows to get a loan. CoreWeave is able to use the GPUs, and my guess is CoreWeave could potentially go public at some point. NVIDIA's HBM supplier SK Hynix is out of that high bandwidth memory until about 2025 among skyrocketing demand for AI. Somebody that runs a paid service recommended an HBM testing company that is now up almost 100% to the subscribers. I'll pat myself on the back. I might wear that out. Moving on to Google. Start of the week at 167, basically flat on Google, down just fractionally, but we'll say that is flat. Now, Google urging a U.S. court, of course they're doing this, right, to deny changes to App Store sought in that Epic Games lawsuit. We would love some clarity here at some point. This is going to, obviously, it behooves Google and Apple to string this out for as long as possible in the court of law, but it would be nice to understand what the fees are in the App Store, in the Play Store going forward, so we can start to model going forward the types of revenue, since these are juicy revenue streams for these companies. Now, the company, despite amazing results from Google, they are laying off hundreds in their core teams, and they're going to move some of the jobs to India and Mexico. I got to admit, as somebody that constantly gets here on the channel and gives it to you from the investor point of view, screw it. These employees were working in Sunnyvale, California, which is one of the most expensive places to live up here in Northern California. They were probably making good salaries. If we can can these people and move the jobs to India and Mexico, well, we're saving a couple of bucks over at Google. But part of me also says, my God, Google just put up one of the greatest quarters of all time. They have over $100 billion in cash. They really have no financial worries at all. And they're firing a couple hundred people and moving the jobs to Mexico and India. It's a really bad look, honestly. Now, Google asked the United States to revise immigration rules to woo AI talent. I agree with this. We have too much illegal immigration into this country and not enough legal immigration. As somebody that went to college with a lot of people that were on visa or were here and able to study, and then they had to go back home afterwards, I've recognized and realized the struggle firsthand for college students that are here from overseas, people that are trying to work here, at least temporarily or for a period of time. It is a struggle for them. And then we just let people by the thousands pour in over the border illegally. Man, we should really be bringing in the talent that we need and making it easier for those people to come. And then look, the southern border is its own topic that we don't need to get into, but it could be addressed as well. Now, Google is going to pay News Corp up to $6 million annually to develop AI content. However, according to Seeking Alpha, and a News Corp spokesman said, we absolutely do not have an AI content licensing deal with Google, though they have a number of partnerships. Overall, we're going to see another story when we get to Microsoft. If you're in the business of making content, I think there was some worry when AI was rolling out, it could write essays and do all this stuff. People that were writers and people that were content creators were kind of worried. I think as we progress, we're going to realize like making content is actually going to become more valuable and probably more profitable going forward, since it's hard to train these AI models on synthetic data. You actually need humans to make this data. Now, moving on to Microsoft, start of the week at 401. Up just fractionally to finish the week at 406 and some change. Marjorie Taylor Greene, who is, I think, it depends on which side of the aisle you're on, is either a hero or a controversial figure in Congress, but she disclosed that she bought Microsoft and Qualcomm. Now, for the record, I don't have any problem with these congresswomen or men that really make a name for themselves. There's another one from New York, Alexandria Cortez. There's a few other ones, depending on what state you're in. It's the people that get elected and go to Congress and then you never hear from them and they don't do anything. Those are the people that bother me the most. Now, does she do some crazy things and say some crazy things? Well, everybody does on both sides of the aisle, but she just bought Microsoft and Qualcomm. So take that information and do with it what you want. Now, Microsoft's going to spend $2.2 billion building cloud and AI infrastructure in the great country of Malaysia. Also, to do that, they're going to purchase 10.5 gigawatts of renewable energy in a big deal with Brookfield, which is a big asset management firm. Now, I get a lot of questions, and there's a lot of comments on, and it's a correct assumption. It's not only a correct assumption, but it's a correct way to think, is all this AI, and everywhere you look, AI is going to create more energy demands here in the United States. Well, there's this great article. I'll put a link to it down in the description. I pay for this, so it is behind a paywall. I don't know how much you're going to be able to read of it, but it's by Semi-Analysis. That is founded by Dylan Patel, who's a great guy. I met him last year in San Francisco. Really, really nice guy. Has a great team and does some great research. He put out this research paper called AI Data Center Energy Dilemma, Race for AI Data Center Space. The long and short of this article is, yes, it is a dilemma. It is a challenge, but believe it or not, the United States might be the best position to meet that challenge. And it's actually other countries that are in the most trouble when it comes to energy. Now, OpenAI signs a deal with Financial Times. This is similar to the Google deal potentially with News Corp to use content to train AI models. This is just the beginning, guys. And look, if you're looking for a career and you're a young person, AI obviously is interesting, but man, producing content, again, I think has not only become more valuable, but more profitable going forward. Moving on to Tesla, start of the week at 189 and some change. Tesla shares sliding down again, nearly 4.6% to finish the week at 181. Let's make some things clear, though, before we get into the Tesla news. I've had some people in my comment stream saying this, that, and the other about Tesla. I'm a hater, blah, blah, blah. Folks, let's just get things clear. The few shares that I was able to hold on to, and when I took a new position, there was some compliance things. I wasn't allowed to keep a lot of the stocks. One of the stocks I was allowed to keep was Tesla. So let's get that off the bat, is that I'm a shareholder of Tesla. Number two, Unlike a lot of people that you hear about in the Tesla and talk about Tesla, I actually own a Tesla. Not one Tesla, but I actually own 2 Teslas. So I have firsthand experience with the product, which is not what you hear a lot of. A lot of people want you to watch a full self-driving video. I can get in the car and experience it myself. Not only that, I really like Elon Musk. I love what he's doing over at Twitter. I agree with him on a lot of things. I think he goes over the edge at times, but that's one of the reasons why I really like him. Now, U.S. government gives EV makers a 2-year reprieve on graphite for batteries. This extends tax credit for vehicles containing Chinese graphite for another 2 years, probably because there's really not a lot of alternatives to get graphite other than in China. Now, Tesla is pulling back on their gigacasting ambitions as the company continues to make cost cuts. This is another reason why I really respect Elon Musk. Gigacasting was a big competitive advantage. It was also one of the methods that they were hyping and touting for a lower priced vehicle where they cast metal all at once and create these cars out of maybe 1 or 2 pieces. Simplifies the manufacturing process. Well, they're scrapping that because they have to continue to maintain cost and understand that the viability of the company is more important than making promises to investors. Now, they also are making very difficult job cuts as well, including on the supercharger team, where you had around 500 workers reportedly fired from the supercharger team. Now, the company has fired people across all divisions across the history of the company, including in full self-driving, supercharging, wherever you look. But I think what Elon Musk has proven at Twitter is these companies tend to get bloated from an employee and an executive perspective. Oftentimes, these companies can do more with less people, and they've proven it time and time again. Now, we feel for the people that lose their jobs, but in this environment, Tesla has to make these hard decisions. And this is one of the reasons why I continue to hold shares of Tesla, because they have a CEO that can make those decisions. And honestly, not every company can say that. Now, they went full speed ahead in China, reaching a mapping deal with Baidu. And to steal a line from Mr. Jim Cramer, who pointed this out, there are very few CEOs that can take a trip to China and strike a deal with Baidu, bypass everybody here in the United States, bypass everybody basically in China, and go right to the stores. Elon Musk is able to pull that off, and folks, that has huge value. And as long as he is a leader of Tesla, there's probably bright things ahead coming for the company. Now, move over to technical segment of the show. You're seeing a big, gigantic gap in the chart. You don't see this often with the S&P 500. Occasionally you see these gaps. You saw it today because of the Apple news. Did it confirm that this series of lower highs that feels like we're beginning to make in the S&P 500, does it confirm that that's not going to show up? No, I don't think we have any confirmation that this was just a temporary kind of blip in the radar and we're going to blast to all-time highs over the next week or so. You look at Starbucks, you look at McDonald's, you look at the job data that came out today. Everything's pointing to a very much weakening economy. I still think, again, this technical pattern will make the final decision, but I still think we make another leg lower. You'll have opportunities to buy lower. If you don't, well, again, you should have some shares already locked in a long position, and you should be able to capitalize from it. Now, Meta gap down after earnings have drifted back to a level of resistance. It'll be decision time for Meta next week. Can you power up above 450? If you do, you got areas up at 480, which is probably the next stop. If you get rejected here at Meta, get your wallet ready, because that's your opportunity. You get rejected here, we could retest this area at 420. That could be interesting. Lower anything south of 420. And yeah, you're probably smoking and you're buying a little bit of Meta at the same time, although partake in that first part. Now, speaking of gaps on the chart, look at Apple. We're still consolidating sideways. So let's get something real. Yes, we put up a big gap in the chart. That canceled out kind of the micro downtrend that we were making. We were making lower highs, lower lows. We thought there was a potential to break down here to the 150 range, at least temporarily. That's absolutely not going to happen. It looks like we're on a destiny, maybe back to retest areas up here at 180, 190, but there's nothing about any of this, including the company's financials, especially especially fundamentally. There's nothing that says to me with Apple that they're going to break out above $190 per share, other than that the company is using their cash on hand and operating cash flows to buy back the shares. So that potentially could be enough to push the shares to all-time highs. But is that what I want? Do I want to sell into that? I think that's the question Apple shareholders have to have. Do you want to be a buyer along with Apple, or do you want to sell your shares to Apple, considering device sales and really everything across the board fundamentally actually doesn't really look very good for Apple? Now, moving on to Amazon, just beautiful. I mean, this is all you need to see with Amazon. Beautiful technical pattern. We are marching our way back to the top. It looks like we're trying to push through. It's difficult. You're trying to push through this 180 level. If Amazon is able to do that, you're not exactly sure where it stops. I think you're easily getting up over 200. I mean, that's not a big stretch. It's like $10 higher. But sellers are emerging here. But again, the company didn't give you a huge reason to sell your shares. And that uptrend right there, folks, that really started back in December of 2022, that is as beautiful as it gets. Now, also beautiful is the Netflix chart. We have had multiple uptrends, but the biggest one was this one surrounded by these blue lines. We blasted out above it, and then we did a nice little back test, not all the way back to the back test. This is why when you make these channel lines, go ahead and leave them in. When the company kind of breaks out above them, or maybe even breaks down below them, go ahead and leave your channel lines in, because oftentimes what you have is a back test either to the underneath side of a channel, or in this case, we back tested to the top of the channel. Doesn't really mean a whole lot, but in this case, you've been making higher lows, higher highs. There's nothing with Netflix, both fundamentally and technically, that makes you to believe that that trend is not going to continue. And in fact, we've got overhead resistance all the way up here at 709. I think sometime this year, we probably retest that area. Now, moving on to NVIDIA, chart's looking a little funky. It doesn't really matter about the past. We'll get to more what we've been doing more recently. Still been making lower highs, lower lows. None of it's been confirmed. With NVIDIA, we're on earnings watch in 19 days. So on May 22nd will be a critical day. Will we set, I think the question with NVIDIA, as we move over the next 19 days, do you set up at an all-time high, or you drift a little bit lower with concerns about it? I think if you drift lower with NVIDIA, you're buying that, because there's nothing that says NVIDIA is not going to beat. Google's looking absolutely fantastic. You've made higher highs, higher lows. We gapped out of this like Meta almost tried to close the gap. That would have been a very, very nice spot to buy shares. I'd still be patient on this one. You could accumulate this one in the 160, 170 range if you feel like it. Wouldn't go all in, but that one's looking absolutely beautiful. Microsoft is going more or less sideways, although the longer term trend, very much like Amazon, if you clean out some of these lines that probably don't even need to be on this graph anymore, you get a clear sense of the uptrend that we are in. We are in that uptrend with Microsoft. And I guess looking at this trend, if you want actionable advice, you could be buying Microsoft at 406 with the idea that you test the top of the channel relatively soon, back all the way up here at, I guess that would be closer to 450. So you got $50 in upside. If you want to be on the safe side, you put a stop loss, maybe $10 underneath, and you play $10 to the downside, 50 to the upside with that type of technical pattern. Now, with Tesla, nothing has changed, folks, and we're not going to be a cheerleader. Just because I own the shares, just because I like Elon Musk, just because I drive Tesla cars, doesn't mean like I'm going to be a fanboy. There's plenty of those channels here on YouTube that fanboy Tesla all the time, fanboy Palantir, fanboy PayPal. And maybe that should be a strategy. Maybe I should just turn into a straight fanboy cheerleader on these stocks, because that's what some of you guys want to hear. You want to like Tesla and then only hear about the positive stuff about Tesla. But it's just not that way. This is a real channel. This is for real investors, not people that pretend to be investors and pretend to actually know about the stock market. This is lower highs, lower lows. There is nothing about this technical pattern in the shorter term. There is nothing nothing about this in the 4-year chart that says this is going to break out. You don't get any confirmation of that with Tesla until you get back over $250 a share, which is a mile away at this point. In fact, more recently, yes, we bounced off the lows down here. And again, this green box with Tesla, you can go back to all our videos with Tesla. It goes as low as 105 and it goes as high as 166. That is a buy zone box. And over the past 4 years, if you had been patient and waited and bought Tesla in that box, you would actually be positive on your shares. There's very few people out there that are positive on their shares of Tesla. I am positive on my shares of Tesla because I have added and accumulated in this green box. Now, you could have done that recently if you wanted to, but I don't think you have much to worry about. You got about halfway up the channel box and you got rejected. That's not a good sign technically. You did that back in February and you ran from 203 all the way down to 140. I think we retest the bottom areas down here south of 160. If you like Tesla, it's not about being a fanboy. It's about making smart decisions from an investment standpoint, and you're going to have opportunities. Don't let the good news cloud your judgment. And when there's bad news with Tesla, you kind of have to sack up and make a purchase. Guys, that was the FAANG Stock Recap Show for Friday, May 3rd. I'll be back probably this weekend. There's a couple of companies that I want to do some videos on. You can leave comments down in the video, comments in the section of the video if you have companies that you want me to cover, but I'll try to cover 1 or 2 companies as we move into the weekend. Until then, thank you for your support, and we'll see you again next week. Good luck with your investments.